You gonna talk?
Oh, are we live again?
When it says you are live across
Yeah,
our
see,
screen, that's
here-
when.
Here's the problem. I'm old and I can't see very well, so I can't see that little thing up there that says you are now live.
The thing
So
that's like
welcome,
this big.
Yeah.
welcome everyone. That's also the dark side of our monitor.
Stop throwing up excuses there, bud.
All right. Well, then you start us off from
Hey,
now on.
hey, this is Wendy Sweet, and we're here with Bill Fairman and Jonathan Davis, and we are so glad that you are here with us today because this is the Ask an Ugly Question session.
Yeah, I was going to call it another episode of First World Problems.
And there are a lot of problems out there, aren't there?
Yes.
Yes, and we're here to try to solve all of them,
That's right. That's right.
or at least point you in the right direction, right?
Hopefully.
Right.
So don't forget to like, share, and subscribe.
Mm-hmm.
Our website is carolinahardmoney.com. If you are a borrower and interested in borrowing money, click on the borrower tab. That's pretty easy, right?
That so far.
If you're an investor and you're looking to get some passive income or passive, what else would
Wealth
it be?
building.
Wealth building. Thank
There
you.
you go. Yeah.
I need another cup
You're
of coffee.
welcome.
You can just click on the investor tab. And if you have any questions for us, there's a little
Keep
chat
them to
box.
yourself.
No, put them in the chat box. We'd love to answer them. Yeah.
Absolutely. So,
For the most part.
what ugly question do we have?
So here's what's really cool. If you haven't seen this, we just started this the week before last, or was this last week? Was our
No, it
yeah,
was 2
the
weeks
week
ago.
before.
Yeah.
So we have been asking everybody for ugly questions. Everybody has their website built up to where they pump their chest and they're talking about how great their company is, and
Mhm.
which is what we should do, is promote
Yeah.
ourselves, right? But one of the things that I think all websites lack is true, unbiased information on your product or your business or whatever it
And
is that you're doing.
transparency, stuff that people have questions that you're not going to get from a salesperson.
That's right.
Yeah.
And then at the same time, most companies aren't going to tell you that the correct answers.
That's
Well,
exactly
you
right.
ask an
You're
ugly
gonna dodge
question. It's
kind
like,
of around them.
don't look here. Look over here.
Yeah.
You know.
Watch
So,
this other hand.
Yeah.
That's right.
Because as we all know, this is real estate. And
Yeah.
with any business, not just real estate, stuff doesn't always go like it's supposed to.
No.
Right? So what that does for us in answering these questions is figure out where our weak points are on the servicing customers.
Yeah,
And
that's exactly
try
right.
and help make those strengths.
Yeah,
Yep.
that's exactly good. What good twist on that,
Hey,
Bill.
I'm still the consummate salesperson.
Yeah.
Look over here.
No, but it's absolutely true, and there's the real estate's a moving target.
Yeah.
It is always changing, and answers that you get one day may not hold true tomorrow
Right.
because of the way things
It's always
change.
evolving.
That's one of
Yes.
the reasons
But
I love it.
It always comes back around too. It's
It
very
does.
cyclical.
It
It
does. It does. Cyclical. So that's a big word. We have to give him a point or two for that one.
It's a point and a half word.
Okay.
There you go. There you go.
That was really good. So what we're trying to do when we answer these questions is we want to do a question that really kind of pertains to just the borrower side and a question that really pertains to a lender side.
Mm-hmm.
Because we serve two clients. We serve borrowers and we serve lenders, and we want to serve both of them well, and make
Absolutely.
sure that they get the answers and the response and the service that they need. So our first question is why. It's kind of a two-part. Why are hard money loan fees more expensive than bank loan fees?
Mm.
And the second question is, do I have to pay a separate servicing fee as well? So let's hit that first question, the first part of the question. Why are hard money loan fees more expensive than bank loan fees?
Because we can't.
Okay, that's not a good answer.
Yeah.
Well, the individual fees may be higher, but unlike banks, we're not nickel and diming you on a bunch of other different fees too.
Well, we're lending them more money, and we're lending money based on what's predicted as the future,
and
right?
part of that, it all boils down to risk. The loans that
Exactly.
we do are more riskier than banks are willing to do.
Mm-hmm.
That's why we're here. We're offering something that the banks don't.
Yeah, it's whether it's riskier or not. I mean, it's also it's a speed of service.
Sure.
There's a lot of factors that boil into that. Is can we close in less than 45 or 30 days that a typical bank loan takes
all day long?
Yeah. Can we lend based on a subject to or future value? So yeah, I mean, the answer is yes to all of those things. So that, it costs more, but the cost of a lost opportunity will cost you more in the long run.
That's right.
Even though our fees are higher, it's to help you not lose an opportunity. And for us to help you not lose an opportunity and move fast and do those things, there has to be a risk adjusted return for that.
Right.
And usually it's double digit yield on the rate.
Yeah. So we're paying our lenders more than a bank is paying for the money that they have to lend to.
Yeah,
right?
Exactly.
A whole lot more.
The banks are. Let's face it. If you have a savings account, what are you getting?
What are you making up
I
for
don't know.
CD?
I mean,
0.002.
I was going to say you're lucky if you're getting a quarter of a point if you're even getting that
And
high.
granted, they're only charging 3.5%, 4%
Right.
on their rates, and they still have. Again, this is about fees, not necessarily rates.
Sure.
But it all goes back into
But
the same bucket.
It's all part of the risk-adjusted yield that we have to calculate based on us running our business, us making a profit. Because guess what? We all want to make a profit.
Exactly. Well,
and then our investors that we have making a profit.
Well,
as well.
and we talked about rates, and this is more of a point, or kind of the fees or points. When we sell a loan or sell it to an investor, we sell the whole loan, the face value of the loan. So that face value rate is going to the investor. We don't make any money here off of that rate.
Right.
How we make our money is off the points. So that's one reason that we charge points is if we didn't, we wouldn't be able to offer investors into loans a higher return, and we would have to take some of that yield off of it.
Right. Right.
So
That overhead will kill you.
and without getting into detail on the fund,
We got time.
because it's for accredited investors only, and you have to
That's right.
go through a questionnaire before I can give you details. But the fund structure is more sharing of points and interest between both the management company and the investors. So it's a little bit different structure in the fund, but it all works the same. You are paying for the convenience. The one thing that I want to point out is when, for example, if I'm out scraping paint off the side of our building,
I'd love to see that.
is that the best use of my time?
Not normally.
I don't know.
But you know what
That's
I'm
a
saying.
good question, Bill.
I'm really going to have to think on that one.
If I'm making copies, is that the best use of my time, or can somebody do that and we pay them less than what my hourly rate would be?
That's
correct?
right. That's right.
So you need to look at this the same way when you're making these loans or getting these loans.
Or making copies.
You're paying because you can make more money doing other things than having to gather all the stuff you're going to have to gather to get a bank loan. And then plus the missed opportunity, because it's going to take a heck of a lot longer.
Right.
Yeah.
Right.
And then at the same time, when you start getting your draws, it takes a little bit longer for them than it does for us.
Right.
Well, I mean, when you get a bank,
Or someone like us.
Yeah, when you take a
all
bank
of us.
loan to close a property, you have 30 to 60 days that you're going to need to close. Typically, you're going to pay market value for whatever that asset is, because you're going to take 1 to 2 months to close. If you can close in less time, you can potentially get that asset for a cheaper price.
Absolutely.
So that's the other piece of it. It's like now you have negotiating power. Yeah, you're going to pay a little bit more for the product, the loan product, but you're going to get a lower price on the asset.
Right.
So that's another piece of all of this.
That's exactly right.
Mm-hmm.
Good stuff.
Excellent.
So now the second part of the question: do I have to pay a separate servicing fee as well?
And that question was posed from a borrower, but it was also posed from a lender.
From a lender, yeah. So on the borrower side, we use third-party subservicers, which is just a licensed servicer for loans, and they do not do their job for free. So we charge the borrower a servicing fee to set up that loan and to service that loan for the life of the loan. If it's 6 months, 12 months, whatever that life of the loan is, that's charged up front to the borrower. So yes, you have to pay that. Otherwise it would be a cost or more overhead, as you said, onto us. And, we're not about adding overhead
Right.
as much as we can. And it's the cost of doing business. Again, you got a loan product that allowed you to close quicker, potentially negotiate a lower price, all of these things. So yes, there is a cost of doing business. On the lender side, there is a servicing fee as well. And kind of how I explain that to everyone, if something happens to the loan, let's say you buy the loan and the loan goes into foreclosure, or whatever the case may be, there are additional fees that a servicer will charge: foreclosure filing fee, a document prep fee. Now you have to set up an escrow payment with the closing or the foreclosure attorney. So all of these fees come in. Now, do you want to be hit up every 2 weeks, every 2 months for those fees as the lender? Because those are the lender's costs to bear. I mean, no, you probably don't. So we charge a marginal fee for the servicing of the loan to transact all of the transactions that happen and to mitigate any future risk that may happen in the loan. And that's how we cover those costs when they do arrive. And trust me, they do. Like, loans go into foreclosure, things do happen. So that's how we cover that cost.
Right. And the servicer charges us to cut checks
Yes.
for the lenders. And
Yep.
if there is, let's say we have one loan that has 4 lenders in it, they're charging us the same price for every single lender on that one loan.
Yeah, let's use a fictitious number. Let's say it's $20 to disperse a check to a lender. Whether it's one lender, it's $20, or if it's 100 lender, it's $20 per lender.
Yeah.
So, every lender would have to bear that cost, and we do not transfer that cost to the lenders.
Right.
We absorb that.
Right.
And for that absorption and everything else that we do, we charge a fee.
And we just do a small flat fee. So what is it? So if you're getting, let's use more fictitious numbers. If you're getting 10.99%, that's a return to that lender of, what did you say it was? 10.74? Is that what I
You're
heard?
looking at me.
Was it you that was talking, or
No,
Jonathan?
it was Jonathan.
That I should have known. He's making copies.
Yeah.
Scraping paint.
Scraping paint off the side of the house.
Yeah, scraping paint. So if you're making 1099 on the face value of the note, and you're paying a 3% of your payment amount as a fee for the servicing, your overall per annum return will be 10.74. And the question I would ask, if I ask myself this question is, do I want to make 1099 and have to deal with any issue that arises from this loan? Or do I want to make 10.74 and deal with no issues that will arise from this loan?
Yeah.
I'm going to take 10.74 because I don't want to deal with this loan.
Yeah.
I want to make a passive income.
That's exactly right. And if you go back to the borrower side paying servicing fees, we get people to say, well, if I use a private money lender, a guy that has a self-directed IRA, they're not going to charge me all these fees. And you're right, they're not going to charge you all those fees because they don't have the overhead that they have to pay on it. And you should have somebody in your bag of tricks that you go to that will lend you money like that. That's, we encourage you to have several different people that you borrow money from. But also understand that one person lending you money will get tapped out. They're not going to have, they don't have millions of dollars to lend.
Yeah.
If they do, I'd like their number.
I like to say that they don't have infinitely deep pockets.
Yeah, that's a good way to put it.
Now,
You figured that out while you're scraping paint.
Now, if someone is
2.5%.
lending you money as a, and they're servicing their own loans, yeah, they're not going to charge you that. But if they set their loans up with a sub servicer, which a lot of people are doing because they don't have, like, if you are investing with your IRA and you have, or your self-directed IRA, and you have $500,000 that you're lending out of, you probably aren't doing it full time, and it's your IRA. So who's servicing those loans? You're going to set it up with a third-party sub-servicer. It's going to cost your IRA to do that.
Yeah.
So, and you can either absorb that in your IRA and it can compress your yield of whatever you're getting on the note, or you can pass those fees along to your borrower as a cost of doing the loan.
Yeah.
So
yeah, exactly.
It's again, if you're doing it full time as a investor and you have a couple $1 million or whatever it is, and you're just servicing it, yeah. As a borrower, if you borrow from them, you're probably not going to pay those fees.
Yeah.
Now, here's another thing to think about if you're a lender and you're lending out of your IRA. Now, we know that if you're an investor in rental property in your IRA, you are not allowed to touch that house. You can't change a light bulb. You can't cut the grass. You have to hire a management company. You can't do any of the work.
That's right.
That's right.
So how much work, if you're lending out of your IRA on your own, are you actually doing? Are you driving by and doing inspections? Are you ordering appraisals? Are you doing the draws?
That's right, because you're not even supposed to do the inspections. I didn't think about that.
All that is additional work.
Mm-hmm.
Now, I'm not an attorney.
He just plays one on TV.
We do know some good, we do know some really good IRA / tax attorneys.
Mm-hmm.
And I don't know that this has ever been brought up, but I do know that in the 2017 tax law that was passed by the Trump administration, one of the things they stuck in there that nobody talked about is that if you are in the business of lending out of your IRA and you spend more than 100 hours a year in that IRA managing that lending business, they could recategorize your money and call it a business and charge you UBIT.
Really?
Because it's no longer passive.
Right.
If you're spending more than 100 hours a year, it's not seen as passive.
Huh.
So again, I don't know how they're going to look at that. You could always claim that I only did 98 hours a year. Just saying that if they actually put that language in, they may start looking at these.
Yeah,
things
they
in the
could.
future. And if you turn it over to a, managed portfolio, you don't have to worry about it anymore.
Yeah, that's
right?
a good point.
So
That's a very good point.
Is that extra, 20 basis points?
Yeah.
Worth
20.
the effort?
Yeah. Is it worth? Yeah.
But I have a excuse me. This reminds me of a conversation I had yesterday on my Wednesday with Wendy's that I do. I help mentor people who are interested in either getting into the business or they're in it and they're just trying to get better at what they do. And we just know so many people. I love connecting them with other people outside our network that might be able to help them too. But I talked to one couple yesterday that filled out an application for us, and I told them about our Wednesday with Wendy. They signed up, and they ended up using a private money lender instead of us. Mm-hmm. So I was a little hurt that that they chose someone over us. That was he was charging them a half point less than we were on the points up front. So it wasn't a big difference, but I know the lender, Tim Mank is the guy that's the lender. He's a great guy. And I told them that he's a great guy. I definitely want to work with him. I've known him for probably 20 years at this point. And he will do a great job. And, he's not charging for the inspections that he's doing and or servicing or any of those extra fees. And I'm sure they'll be really, really happy with them. Mm-hmm. But, because of the other services we're offering, the Wednesday with Wendy and the guidance that I've been giving them on deals and the things that they're doing, they'll come back to us for the next loan.
Yeah, absolutely.
That we do. So just understand
Sounds like sour grapes.
Yeah. Yeah. They're not my friend no more. No, I know. That's what we encourage is for you to be able to have several different options in your tool bag to be able to be able to borrow from different people on things like that.
Listen, that's something that we always and have always talked about, is that we encourage you to find private lenders first, but you always need to have a hard money lender in your back pocket.
Absolutely.
Because again, they don't have infinitely deep pockets,
Mhm.
and they run out of money occasionally. And you need to have somebody you can quickly go to that will help you scale your business.
Mm-hmm.
And to all those private lenders who are making, 8-9% on their loans and 1 or 2 points, that's nice. You could
You can do better.
You could actually buy our loans and make more money.
That's right.
So just throwing that
That's
out
right.
there.
Can we talk? We can talk about that. How we sell some notes from loans that we do, because
Yeah,
that's
sure.
a
That's not an accredited
yeah,
thing.
it's not an accredited thing. So we can absolutely talk about that.
All you have to do to buy a note is fog a mirror
Yeah, and have the money.
and have the money. Yeah.
But we do all the work. We do all the work for you. We've done all the underwriting for the borrower.
Yep.
For the
And our underwriting is set up to sell loans
to the national buyers.
correct.
Mhm.
Correct. So our underwriting is pretty thorough.
Right.
I would.
We have appraisals on all of them.
Mm-hmm. Yep.
Subject tos and as is.
Yep.
We pull background checks. We pull credit checks.
Mm-hmm.
We look at their tax returns, their W-2s.
Yep.
Their bank statements. We've reviewed the repair list, the rehab list, or the construction list, whatever it is,
Mhm.
to make sure that it coincides with reality.
Yeah.
That you're not trying to
That's
do
good
a
way to put that as
bathroom.
well. I was going to call it the BS test.
Yeah.
Yeah. That $50,000 rehab with the $20,000 contingency.
Yeah. Yeah. We make sure that the rehab list is right on. So we've done all the work up front, and you have the option to buy that loan or a portion of it. You don't even have to buy the whole thing.
Yeah.
You can buy a portion of it from us for exactly what we're in it for. We're not giving a discount on it, but we're not trying to make money off of it either. We do it because we'd like to have the capital back to do more loans.
Yeah.
Right.
Yeah. We have plenty of loans to look at. We like to do those sales. I mean, it's a very simple process. It's a assignment of mortgage or deed of trust, depending on what state your security instrument is,
Mhm.
and it's an allonge of the note,
Right.
and it is about as simple as that.
And we service it for you. We
And
continue to service it
we
for
will
you.
service it for you. If you want to have servicing retained, you can, or I'm sorry, released. We can release the servicing to you if you buy the whole loan. So if you want to service it yourself, be our guest.
But I wouldn't recommend it, because then you have to do all the draw requests and all that stuff.
all the draw requests, all the taxes, sending out the tax forms.
Make sure the insurance is updated and all of that stuff.
Yeah,
we don't.
taxes are paid. Insurance is renewed. If it's not, putting forced place insurance on it to protect yourself as a lender. I mean, there's a lot of things involved in it.
Yeah, it's a great way to learn, though, if you want to learn the hard way.
We do have a new question.
Okay, what is it?
So the question is hard money best for fix and flip, or do you guys offer anything for buy and hold?
Oh,
investors?
that's
we
a scary
do
question.
and we don't.
Yeah.
And we're working on it. So
it depends.
let's get a little detailed. Hard money really is for short-term acquisition and
new construction.
But what I mean is it's for short-term.
The only
It's
reason
not
you
for
saw
buy and hold investors, unless you're buying it at for a distressed reason, you're going to fix it up and then you're going to refinance it into something longer.
Right.
Well,
right.
and let's jump into why
And yes, we do that.
Why do people associate hard money with long-term buy and holds? That's because Wall Street money, hedge fund money, saw a shiny object and said, "Oh, we can make some money," and they pumped a lot of money into the hard money section of the economy, and now we have these landlord loans or long-term investor loans that are done by hard money lenders, but they're not holding them.
Right.
They're selling them off to those aggregators, to those hedge funds.
Right.
So I mean,
And they're
long-term hard money didn't exist until what? Couple years ago.
Yeah. And so the first part of the question is hard money best for fix and flip? Absolutely yes. And your goal is to get in and get out as quickly as possible. When people call us and they say, well, your term's only 6 months. Well, you know what? You don't want to be in a loan longer than 6 months. You don't want to be rehabbing a house longer than 6 months. The market's changing too quickly, right?
Well, it's like your term's only 6 months. Your rehab budget's only $25,000. How long do you think it should take you to do $20,000 worth of work to a house?
That's right. And don't do it yourself.
Yeah, please
don't do it yourself.
Pay someone to do it. Yes.
And you don't want to do a fix and flip where the market time is more than 90 days.
Yeah. Yeah.
So that's another thing. I know that's a concern. What if I have this thing finished and then I can't sell it?
Don't
right
worry,
away?
we will extend you as long as it's everyone's current on their payments, and it's a good opportunity to
That's
extend.
exactly right.
We write that into our notes that we will extend you should that need occur, and we're agreeable to
That's
it.
right. And you go back to the very first question, which is why are hard money loan fees more expensive than bank fees? Well, when you are getting into a fix and flip, you need to add the numbers into the deal. Your deal should work with the cost of the loan included in it. You want to make sure you need to back your way into it when you're figuring out, should I use hard money? Would it be better if I really found somebody that was a private money lender? Well, yeah, you should have one of those too. You should start off with what the after repaired value is, subtract or multiply it by 65%, which is the percentage that we like to be in, subtract out the rehab money, and what you have left over is what you can pay for that house. The numbers are either going to work or they're not going to work. There's really no gray area in there. So yeah, fix and flip is great for short-term hard money. Now the long-term buy and hold stuff that was out there, it disappeared completely, and it's starting to come back slowly. So what people are doing is they're using a hard money loan to buy, fix, and then they refinance it into a longer term hold product. And sometimes that can be set up like a commercial loan where it's a 20-year AM and every 5 years it's renewable. Or they'll set it up on a 30-year AM where it truly is a 30-year loan.
Yeah.
And those are coming back. In fact, we're working with a company now that should have one ready for us to use.
Yeah.
But your true, here's what your plan should be if you can qualify for a Fannie Freddie loan. You acquire the property, you fix it up and have it rent ready with a hard money loan. And then you can turn around and refinance it with a conventional mortgage. If you do that, you're able to use the new appraised value, not what you paid for it.
Depending on who the lender is, but yes,
Well,
it's a
almost
possibility.
all lenders, as long as you are paying off a mortgage, they consider it a
rate and term.
a rate and term refinance, and not a
Correct.
cash out.
Right.
And then they'll allow you to use the new value. Now, what we should do is, and yeah, to the answer of your question, yes, we have stuff for buy and hold, but it's just the first part of it right now, which is the buy part.
Yeah.
You're going to have to figure out the hold, but we are working on that.
Yeah, we're getting.
Now,
we're
what we
getting to
should
that.
do,
Small community banks too is
Yeah.
another great option to refinance it into.
we get back to the speed, why we want you in and out quickly.
Yeah.
Here's what we should do. We should start marketing our loans that if you pay this loan off in 3 months instead of 6. No, I'm sorry. If you pay it off in 6 months, we're going to give you a discount of half your interest rate. And let me
Because you
explain.
kind of get that.
Let me explain why. If you have a 10% interest rate,
Yeah.
it is interest only, and it's annualized for 12 months.
That's right.
It's annualized. So if you only pay 6 payments, what's your interest that you're paying?
It's half of what you were supposed to pay. Yeah.
Instead of the 10, because you only made 6 payments, and it's based on 12 payments.
That's right.
So you are already getting a half discount if you pay it off in 6 months.
That's right.
Now, if you do it in 3, you're only paying 2.5% interest. Not bad, eh?
Yeah.
But we're not going to charge you 10.
I like his math.
I'm just kidding.
That is a great way to go.
Yeah, that was a great question.
Yeah, really. I say we got 20 minutes and we've got this other question. You want to read that one, Jonathan?
Yeah. So the next question is, how quickly will I receive my first interest payment, and how often do payments occur? So I guess this is only for the lender side.
Yeah.
How quickly will I receive my first interest payment?
Okay,
Again, that
so,
depends.
No, right after the closing.
Yeah.
Well, yeah. So
That's true.
unless you closed on probably the first of the month, you will get. And it depends on how we set up the. Anyway, that's probably misleading. Anyway, you will get an interim interest payment immediately at closing.
Collected at the closing.
So interest is paid in arrears, which just means if your payment is made on 8/1, that 8/1 payment isn't prepaying all of August. It is post-paying all of July, which means July 1 through July 31st is your 8/1 payment. So when we close, let's say we close on July 15th, you are getting paid 17 days of interim interest to true you up until the end of July. Then you will not receive a payment again until 9/1, because 9/1 will be paying for the interest between 8/1 and 8/30.
Right.
So you have at the close, you got your payments up to July 31st. You got prepaid that. And then you won't get another payment for a month and a half, and that'll be for the August payment. Now, there are transactional times that occur. So when the wire or the ACH or the check is sent to the servicer, they have to put that in their account. It has to clear their account.
So it's due on the 1st and it's late on the 5th.
Correct.
A lot of people get the payment there right around the 5th.
Yeah, most people pay. I would say most people pay on the 4th or the 5th. Like most don't pay on the 1st.
So that means?
That means that typical, you have to wait 5 business days roughly for those payments to clear. So now if they paid on the 5th, we're already at the 10th. And then once that clears, it usually takes 2 days. And I'll probably get too deep into this, but we have to set up a notcha file, which is just an ACH file with our bank. And that takes 2 days to set up and disperse. So now we're at the 12th or 13th of the month before you'll probably get your payment that was for the 1st. And that's just the time frame. It's the same for every subservicer everywhere. Like, unless the borrower pays 10 days early from the due date, you're not going to receive it on the due date.
Right.
Yeah, so best case scenario, sometime between the 15th and the 25th.
Yeah.
Is when your payments are.
Yeah, because and then if it arrives on the 6th of the month, the servicer only really pays out twice a month, right?
Yes. Yeah.
They're only paying out twice a month. So you're gonna on the 6th, you're gonna miss that time frame of when you would originally get it between the 12th to the 15th.
If it doesn't clear in time. Yep.
Yeah, you're gonna miss that deadline. So what that means is they're not gonna address it again. I think it's the 20th when they hit it again.
Might be. I don't know that offhand, but I think it is the 20th.
So that's why sometimes you're thinking, wait a minute, I don't understand why my payments are coming in so late. Well, it's because they're coming in right there at the deadline. And then the servicer waits another, and I believe it is the 20th day that they come back and readdress all the payments that came in from after the 5th up until that point.
Yeah. I mean, I get asked so many times. It's like, hey, it's, where's my payment? It's the 3rd day of the month. I'm like, we haven't even gotten the payment. Like there's a grace period. So on your personal mortgage, you have a 15-day grace period. You have your payments due on the 1st, but you have until the 15th to pay it. On our loans, they're business purpose loans. They're due on the 1st, but you have until the 5th to pay it. So there's a grace period. So, we don't get the payment on the 1st of the month.
No,
so I wish everyone paid us I'm sure mortgage companies wishes that too about, personal property. It's like, I wish everyone would pay on the 1st of the month. But so we don't even get it. And it just takes time to turn it around. I mean, I won't go too far to say that our banking wiring system and everything is antiquated, but it is. So it takes time.
There's an app for that.
Yeah.
Or
Yeah.
there should be.
We have a question from Diane. Hey, Diane,
Wait a
it's
minute,
so good.
We didn't answer the very end of this. How often do they occur? They are going to occur monthly.
With us.
Payments are going to, with us, they're going to occur monthly until the loan pays off.
Right.
Yeah. The note dictates the occurrence of the payments. So you can set it up monthly, weekly, bi-monthly,
Some
quarterly,
people set it up so
annually.
it's done when the loan pays off.
Yeah, there's some people. I mean, and then there's some loans that the borrower prepays all the interest up front, and there are no loan payments because they're already paid up front. So now you just have to wait till the maturity of the loan.
Yeah.
So,
Yeah.
I mean, it's however you set it up.
Yeah. Absolutely.
Yeah.
Absolutely.
Hi,
Now,
Diane.
can I say hi to Diane? We love you. And that's a great question. Why does the private money lender, we talked a little bit about that, but maybe we need to go in deeper. Why does the private money lender have to bear the cost of servicing rather than the borrower? The borrower does as well.
Yeah, there's two sets of costs. There is the borrower side, which is the preparing all the tax returns for the year-end taxes, collecting the monthly payments, sending out delinquency letters, default letters, whatever that may be. That's on the borrower side. The borrower has to pay for all of that service.
Mhm.
And then on the lender side, there is transactions. So the wires coming in and out. So the bank doesn't let us do that for free. Then
They're paying us all those big bucks.
I know. So
savings
I
account.
mean, every time a wire hits our account or we send one, there's a fee.
Yeah.
And then on the loss mitigation side, so if a loan goes into foreclosure or bankruptcy or needs to be modified or forbearance or anything outside the normal scope of servicing, that servicer that we use, that's an additional fee.
Mhm.
So that is a fee that has to be covered by the lender, us, or whoever we sold the loan to.
Mhm.
So instead of just hitting up the lender every time something comes up and saying, hey, this week we need $25 for this document prep fee, or this week we need $50 for this, or $100 for that. We just say there's this constant fee that's based on the percentage of the payment amount. And if any of those things come up,
It's covered.
it's covered. You don't have to worry about it. We're not hitting you up for anything. That way that you can know that you're getting a constant return on your money. And it's not, well, let me go into Excel because in the month of March, I had to pay $400 for legal fees on this. And then in April, I had to pay $50 for this. And what's my return? I don't even know.
Right.
So you don't have to worry about any of that. You just get a constant return throughout the life of the loan.
Right. Good question, Diane. Thank you
Mhm.
for asking that. And thank you for following us on this program today. Right?
Yeah, you must be bored in Texas today. I'm just kidding. We're very exciting, aren't we?
Bill, you are the most exciting person I've ever met.
That's
So dynamic.
that's exactly right. So
Any last thoughts?
yeah.
Go ahead. While we're at kind of a break, don't forget to share, subscribe, like, and again, our website is carolinahardmoney.com. If you're an investor looking for passive returns, hit the investor tab. If you're a borrower, click on the borrower tab. Okay.
So I just really want to pump up the real estate opportunities that are in front of you right now. You're hearing people say, oh, there's a big correction that may still come.
Mhm.
Another big influx of foreclosures may happen. And what's going to happen with job loss, because everything is changing.
Yeah.
With the way jobs are right now, we've had a loss of a lot of jobs out there, but there also have been a whole lot of jobs that have been created that are new and different from what they were. So things have changed. They're going to be, they're not going to go back to the way it was. Be happy about that, because it's exciting to see, but understand that real estate is a solid investment no matter what.
And, Wendy and I were on a show yesterday evening in Australia. Well,
Oh,
we
yeah, I
were here.
forgot about
The
that.
show was in Australia.
Yeah.
The audience.
We wish we were in
it was
Australia.
they were just waking up. We were getting ready to leave.
Yeah, that's true.
For the day.
Yeah.
But we were covering some of the issues that are facing the U.S. right now. And really what we looked at is the retail renter
Mm-hmm.
that is the one that was living paycheck to paycheck. They're the ones really going to suffer the most through this right now. Fortunately,
You mean retail, commercial retail?
no, I'm talking about on the residential side only.
Okay, gotcha.
So those people are going to be the ones struggling the most to pay rent. The single family purchase side of things is hot, and it's going to stay hot for a while
Mm-hmm.
because people are trying to move out of the cities. They want their own place. They want a bigger place. You have too many kids.
They're
having to
working
learn
from home. Yeah.
You have parents that are working out of the house. They need more room. That
Mhm.
also means they can rent. It doesn't mean that they're going to buy, but the single family homes are really going to be an opportunity. Like I said, the folks that are renting right now in apartments and they're living paycheck to paycheck, they're probably going to end up moving in with family members,
Right.
To overcome this. The commercial sectors, retail, commercial office, I think your Class A luxury apartments,
Hospitality.
those are all going to kind of suffer. Self-storage, big warehouse, those are all going
Good
to be
stuff.
doing pretty well.
Mhm.
So there are definitely some opportunities. The single family people that you're not going to see what happened in 08. What we had happen in 08, people's values went down. They
Right.
were
Exactly.
underwater in their homes.
Right.
And they got a new job opportunity, but they couldn't sell their house to go to that place if they had to move.
Right.
Well, that's not going to be an issue now because we have people that are very equity rich
Mhm.
in this country.
And they're working from.
I think it was like 70 some odd % of all the homes that are owned are
50%.
Yeah, they're 50% or less.
Yeah, I think it's under
loan
50.
to value.
Mhm.
So
Yeah, that's
they're-
pretty strong.
they're not loan to value, but mortgage to
Yeah.
value.
Yeah.
So they're very equity rich right now. So
Yeah.
that's not going to be an issue. People are going to be able to sell those houses.
Mhm.
And so there's going to be opportunity there. There's going to be opportunity in note buying come the fall and early winter.
Yes.
Because
Yes.
you're not going to see, I don't think you're going to see a lot of foreclosures. I think you're going to see the banks and the investors sell the notes.
Yeah. So
versus-
non-performing
Yeah.
notes
Yeah.
will
Well,
be
and-
pretty good.
And that's like, if we can hit on that for a second, that's one of the most beneficial things that private investors, people with self-directed IRAs, people with cash, whatever it may be, funds, buying distressed notes and doing loss mitigation to help to restructure loans to help people stay in their
Mhm.
homes.
Mhm.
Like that is phenomenal, and I hope we see a lot of that.
Yeah.
And again,
Yeah.
there's plenty of equity to work with too. So
Exactly.
You'll probably see more short sales than you will foreclosures, and then you'll have plenty of opportunity if someone can't afford their house anymore.
Right.
They can certainly sell them. There's plenty of iBuyer opportunities out there that'll buy them fast. too.
Right.
Mhm.
Right.
I mean, I hate that for the real estate community, but there's tons of opportunity. And if you're a wholesaler, that's a great way to get in and get some houses.
It
Yep.
is. It is. And
Right.
and the affordable market, you really need to look at staying in the affordable market where, the after repaired values absolutely are below 500, but preferably, 300
It
to
depends.
100.
Yeah, it depends on where,
Where
you
you
are.
are.
Yeah, I mean,
Yeah.
Oh, that reminds me, because we got to sign off here shortly.
Yeah.
Some news out of the left coast. Number one, Google announced this week that they're going to have all of their employees across the board work out of their homes until 2021.
mhm.
So,
That's so they can pay their antitrust fees.
well, part of
It's
this,
another show.
if you think about it, those companies, all those high-tech companies struggle with getting enough qualified talent.
Yeah.
And so they typically try and bring them over from overseas. Well, there's a lot of people in mid-America that could work there that don't want to live out there in those
Yeah.
expensive areas.
Yeah.
Now this gives them an opportunity to start hiring people in the middle of the country
Mm-hmm.
for less than what they were going to have to pay somebody to move out there to the
That's
expensive
right.
areas.
That's right.
And at the same time, San Francisco City Council was kind enough to put on their next ballot initiative that they were going to charge these companies an extra tax if their CEO made over $2.8 million, or if they were more than 100% of what the median income is for the rest of the firm. So there's another reason to get the hell out of San Francisco. So you're going to have a lot of businesses that are going to be dispersing throughout the country, or they're just going to close their San Francisco offices.
Yeah.
Anyway, lots of opportunities.
And you can poop on the sidewalk and get away with it.
That's right. Thanks again for joining us. Hope some of these questions were helpful. No, actually, I'm hoping that the answers were helpful.
Yeah.
Questions don't help much.
That's right.
I don't know. Asking the right question can help you a long way.
That's
That's
exactly
right.
right. We ask them all the time.
But if you don't receive an answer,
It's because we can't hear you. What's that you say?
Sometimes that's telling. So if you don't receive an answer from somebody else, it's probably telling.
all right, we'll see you next week. Thank you so much for joining us. Talk to you soon.